Astrea bond is back with the 9th installment, and this time it is offering a 3.4% yield for the SGD class A1 bond and a 5.7% yield for the USD class A2 bond. So is the Astrea 9 worth investing in? Let's find out in this video. The Astrea 9 bonds are backed by cash flows from a diversified portfolio of 40 private equity funds. As of 31st December 2024, these funds have invested in 1,886 companies across various sectors, regions, and vintage years. The bonds are expected to have a credit rating of A and A+, in line with previous Astrea bond issues. These bonds come with a scheduled call date of 8 August 2030, which is 5 years from now. If there's sufficient cash in the reserves, the bond will be redeemed early at par. If not, the interest rate will step up by 1% and the bonds will mature in 2040 instead, giving them a maximum tenure of 15 years. Historically, the Astrea bonds have a pretty good track record of being redeemed at the 5-year mark, with Astrea 3 to 5 all being redeemed on schedule, while Astrea 6 to 8 are still within their respective 5-year periods but have been building up reserves, which suggests that they are on track to being redeemed too. Now, of course, the bonds are not guaranteed by any party, including Temasek, but they do come with several safeguards. So every 6 months, cash flows from the private equity funds are used to first pay key expenses, such as taxes and manager fees. Then bondholder interest will be paid next. After that, it will be used to fund the reserves accounts. Only then, it will be used to pay for other expenses, and equity investors will be the last to get paid. Additionally, the loan-to-value ratio is capped at 50%. If this is breached, more cash will have to be diverted into the reserves account to lower the LTV back to 50% before any equity payouts can happen. On top of that, the sponsor of this bond, Astrea, which owns 100% of the equity, will take the first loss. So there's a strong alignment of interest with bondholders. Quick pause. If you're looking for the best brokers to kickstart your investing journey, check out Interactive Brokers. You will enjoy one of the lowest fees in the industry at just 35 cents per trade on the US stock market. It also offers Ireland domicile ETFs, perfect for saving on dividend withholding taxes. Plus, it also comes with free company research tools, so you can make smarter investing decisions. Feel free to use my Interactive Brokers link to open an account and start investing today. Alright, let's get back to the video. So, is it worth investing in the Astrea bonds or not? If we compare the Astrea 9 Class A1 SGD bond to other SGD denominated bond investments, it offers a higher yield than both the SGS 5-year bond and the Nikko AM SGD investment grade corporate bond ETF. However, this yield is slightly lower than the Lion Global Short Duration Bond Fund, which currently yields around 3.47%. That said, it is important to note that the Astrea bond pays a fixed interest while the Lion Global Fund's yield is not fixed and may fluctuate with market conditions. This makes Astrea bonds more predictable for income-focused investors. Likewise, if we compare the A2 USD bond to the US 5-year government bonds and the iShares iBoxx investment grade corporate bond ETF, the Astrea bond would also give a higher yield. This suggests that the Astrea 9 bond does offer a relatively attractive yield compared to other similar fixed income options. But then, some of you be like, "Che, the SGD bond only gives a 3.4% yield. I invest in dividend stocks can earn more lah." Some more, the Astrea bond has a 5-year maturity period. Don't waste time lah. Yes, but don't forget that once the bond is listed, it will also trade on the secondary market. That means you are not just limited to earning the coupon yield, but there's also potential for capital gains. For example, if you look at the existing Astrea bonds currently listed on SGX, all of them are trading above $100. Take Astrea 8 as a case in point. It was listed at $100 last year, and today it is trading at around $105 now. So if you had invested back then, you wouldn't be just collecting the 4.35% annual coupon. You will also be sitting on a 5% capital gain if you choose to sell now. And with interest rates expected to trend lower, bond prices may continue to go up, potentially giving investors even more upside. But of course, the capital gains are not guaranteed, as bond prices can also go down too, especially if rates unexpectedly rise or market sentiment shifts. That said, if you are willing to hold the bond till maturity, and if it doesn't default, you will still receive your full principal back, regardless of market price fluctuations in between. Now, even though the bonds have a strong track record, the bonds are not capital guaranteed. As with any investment, there are risks involved, such as investment risk, market risk, liquidity risk, leverage risk. Plus, if you are investing in the USD bond, There will also be exchange rate risks, especially given that USD has been depreciating against SGD recently. So if you're interested in applying for the bonds, you can apply via ATM, mobile banking, as well as internet banking websites of either DBS, OCBC, and UOB. The steps are pretty straightforward, and you can just follow the step-by-step guide on the bank's website. The application will be closed on 12 noon on 6 August. So if you want, you better chop do it quickly to avoid missing out. Given that the placement tranche for accredited investors was 3.6 times oversubscribed and previous Astrea bonds were also oversubscribed, you can expect the bonds to be heavily subscribed this time. Looking at the Astrea 8 balloting results as reference, applicants who applied for amounts of less than 50k were able to receive either full or partial allocations. For example, for the SGD bond, those who applied 9k and below received full allocation, while those who applied between 10k to 29k were able to get 9k allocation. This means if you are applying for a larger amount, you may not get the full allocation you request. In short, the Astrea 9 bonds offer an interesting opportunity for retail investors looking for stable and fixed income exposure, backed by private equity cash flows. With investment grade ratings, structured safeguards, and a track record of early redemptions, there could be a valuable addition to a diversified portfolio. That said, it is important to be aware of the risk involved and only invest what you're comfortable setting aside for at least 5 years. Anyway, that's all for this video. Hope you found this useful. Like, share and subscribe as I'll be posting new videos every week.